In this video, we'll be looking at what is occurring in today's marketplace and whether we are heading into an inevitable recession. Many concerns related to what we are experiencing today are hinged on what occurred back in 2008. To understand what happened in 2008, we need to delve into the past. In the late 1930s, the United States experienced an official economic downturn marked by more than 10% decline in GDP and a peak unemployment rate of 14%. This incident resulted in the most significant economic decline compared to the years before. Fast forward to 2001, when the World Trade Center was attacked by terrorists and the United States was plunged into a state of uncertainty. In response to this crisis, the U.S. Federal Reserve cut interest rates to maintain economic balance. The rates remained low until the middle of 2004, resulting in a buying frenzy in the real estate and financial markets. The decreased interest rates meant that it was easier for people to obtain mortgage loans, and as a result, the number of market participants increased. The housing market boomed, and the so-called housing bubble was born. The housing bubble was caused by a rise in demand for homes and other real estate, which led to an increase in market speculation. The restricted supply of real estate further fueled the demand, leading to a rise in prices. The influx of buyers enabled debtors who were not eligible to obtain mortgage loans to enter the market, further inflating the bubble. However, the bubble could not last forever. At some point, demand declines or stagnates as supply rises, causing prices to drop dramatically and the bubble to burst. The bubble finally burst in 2008 when Lehman Brothers, one of the largest banks in the U.S., faced insolvency. This led to a worldwide economic crisis that resulted in a loss of nearly 9 million jobs, with the unemployment rate in the United States doubling. One theory that has been put forward to explain the situation is modern monetary theory, or you may simply call it MMT. MMT suggests that the US, the UK, Japan, and Canada are monetarily sovereign nations that can spend, tax, and borrow their own fiat money that they control. This means that they are not operationally constrained by revenues when it comes to federal government spending. In other words, they can print as much money as they need and control its issuance. According to MMT, the growing national debt should not influence government decisions, because their budgets are different from those of typical households. Governments in control of a fiat currency system can and should print as much money as they require for their expenditures because they cannot become bankrupt or insolvent. According to this theory, governments can generate the money they need without selling bonds. However, excessive money printing can lead to severe inflation, which could trigger another recession. Some people are wary of this approach because it could lead to uncontrolled inflation, which would have disastrous consequences for the economy. It's hard to forget what happened with Lehman Brothers and the impact it had on the world economy. And now, we have the news of China's second largest property developer, Evergrande, declaring bankruptcy. The situation is concerning, especially considering these are big tech companies that we thought were bulletproof. The situation with Evergrande raises questions about the potential impact on the global economy. Are we headed towards another recession, or can we avoid it? It's difficult to predict what will happen, but one thing is clear. The world economy is in a fragile state. We need to be prepared for whatever lies ahead. Have you ever wondered why affordable housing has become a major issue in China? It all started with the country's rapid urbanization, driven by a desire for better quality of life, especially among the children of farmers who sought employment in factories. Within just 4 decades, around 65% of China's population began living in major cities, making real estate ownership a source of financial stability and a requirement for marriage. Looking back, Evergrande's story began with the Chinese government opening up to the rest of the world, leading to the largest civilian migration from rural areas to urban cities. This resulted in a massive demand for housing, which in turn fueled the real estate industry. However, the demand for housing was not met with a corresponding increase in supply. Slow development and rapid growth drove up housing prices, making affordable housing an elusive dream for many. The local government stepped in and issued loans to property developers while easing credit lending standards for debtors, leading to massive economic growth. Evergrande, a Chinese property developer, took full advantage of the situation and expanded aggressively with the help of cheap credit. They even built a theme park and purchased a soccer team with some of the money. But even with Evergrande's aggressive expansion, they struggled to keep up with the demand for housing. To fuel their expansion, the developers created a system that included financing operations with foreign debt and creating pre-sale options. Buyers started paying a mortgage for a property that hadn't been built yet, but developers started new pre-sales without finishing the old ones. In other words, they created a Ponzi scheme based on the high demand for housing. When the demand slowed down, the scheme started to fall apart. With the slowdown in pre-sales, developers relied more on foreign debt to keep expanding, leading to liquidity problems that forced them to declare bankruptcy. While China's economy has managed to withstand the government's printing of excess money for the past 14 years, this money needs to be removed from the system, and one way to do that is by causing inflation. Currently, there are around $30 to $35 trillion in circulation that should not exist, and it will take some time to destroy them all. However, inflation comes with its own set of problems. It causes the cost of goods to increase while salaries remain the same, which will cause significant pain to consumers. This happened in 2008, and we expect it to happen again this year as higher inflation rates drive out the excess money in circulation. Overprinting of money causes its purchasing power to decrease, which ultimately leads to higher inflation. Furthermore, as the dollar loses its dominance in the market, everything else will shoot up, including stocks, real estate, and crypto. However, this will only be the beginning. As the market figures out that there is so much fake money in circulation, the value of these assets will start to decrease, and inflation will kick in. Unfortunately, this inflation will be long-lasting and dry, causing more economic problems. To further understand our current economic situation, let's turn to The Fourth Turning, a book by Neil Howe and William Strauss. The book posits that history moves in 80-year cycles, separated into 4 phases: high, awakening, unraveling, and crisis, based on when each generation reaches adulthood. The fourth turning, known as the crisis phase, occurs when there is a clash between the prophet generation entering the elder age bracket and the hero generation reaches young adulthood. According to Howe and Strauss, the fourth turning began in 2005 and was triggered by the 2008 financial crisis. They predicted that the crisis would climax around 2020, and that a great devaluation would occur as the economy is restructured by 2026. Inflation will only stabilize the economy for up to 3 years at the current rate. The cycle is predicted to end, and a new era of prosperity will begin around the end of 2025 or 2026. Looking back 80 years ago, the country was in immediate post-World War II period, facing a drowning economy and the worst supply chain issues, resulting in high inflation. However, as interest rates later decreased and stabilized, the economy saw a tremendous boom in the 1950s, and thereafter, with the help of technology, the US emerged as a superpower, while Europe underwent its own rebuilding efforts. The period also saw the establishment of key international organizations, such as the United Nations, the International Monetary Fund, and the World Bank. Even today, some people have compared our current situation to the concept of a big reset, described in the book The Fourth Turning, which suggests that a major crisis can lead to a period of change and renewal. One of the key questions raised by this comparison is whether recessions and depressions are always bad. Looking back at the post-war period, we can see that many important innovations and technological advancements emerged from the economic challenges of the time. Just as in the stock market, periods of growth eventually slow down and correct themselves. During a recession, it's important to remember that other stocks may also experience earnings revisions. However, the financial industry has not always done a good job of communicating this to everyday investors. Many people have been drawn to the stock market's high returns, sometimes investing beyond their means. However, as the saying goes, what goes up must come down. It's important to be prepared for market corrections and downturns. In recent years, we've also seen significant geopolitical shifts, particularly with China's rising influence in regions like Latin America. For decades, China has been expanding its trade and investment in the region, funding projects like space exploration and trading ports. They have also introduced cultural elements and schools to the area. This increased influence is a concern for the United States, as it could threaten its strategic position in the region and beyond. It's important for the US to act on this threat before it becomes too significant. One example of this is the story of Uni Energy Technologies, a US-based company that was unable to secure American investors for its innovative battery technology. The company eventually had to turn to a Chinese businessman for funding, and now produces its batteries in China. This highlights the need for the US to prioritize innovation and investment in order to compete with rising powers like China. For more videos on investing and wealth creation, do subscribe to our channel for more mind-engaging content in the days to come. Thank you for watching.